This is, got a couple offers out. I'm waiting on. Both of them been put on hold by the seller because they've had different circumstances come up. One of them is trying to find a new spot where he's moving and he's not there yet, so he needs to get that nailed down before he can talk sale. Um, and then I've got two more pieces of property I'm going to see next week. So we'll see. Just keeping the ball rolling. Something's got to pop eventually, right?
Yeah, exactly. You keep taking at bats, eventually you're going to get on base. That's the name of the game,
Yep.
which is great.
Just trying to be patient.
Yeah, that's right. See, Matt, see Stewart, Ariana's on here. I know this is like a Thursday afternoon, and in Birmingham right now, the weather is starting to break. So it's like, it's just nice. And I'd be curious to know how many people are like, hey, I might just bail on this call and go enjoy the afternoon outside. I don't know. But no, so what is, how is everybody doing? Again, we just had our last Respark call on Monday afternoon, which I thought was really great. Zane, if you'd like to give me your 2 cents on. I thought it was great. I thought it was really awesome to see everybody like just kind of forcing everybody to like take action or say, hey, no, the timing was off or whatever. What was your opinion on that, Zane? What do you think?
Man, I think it was what we needed as a group to
Yeah.
really. It's funny that we called it Respark, but really just like spark everybody's action, and we got a lot out of it. I mean, I know a lot of the people who've been on the Respark calls are on here now, and they can probably attest to that. But I think it was great to just get in front of everybody, and then everybody to get in front of everybody else too, and like partner up with each other, be held accountable a little bit. It was just awesome.
Yeah, I thought it was great too. So I appreciate again all you guys that were on there. Appreciate you guys making it a priority. Um, Again, it's one of those things where you don't have to do it if you don't want to, but most importantly, like you said, it kind of holds you accountable as something that you can keep moving on. What So let's just jump into it here, guys. What is anybody working on? I'd like to kind of go over and a new thing that I wouldn't say that this is new, but something that Zane and I have been talking about, that a way that when someone is presenting a deal or presenting just something that they're working on, hey, we've got a positive. Let's also, when we are introducing like their deal, introduce something that, of course, that you guys are already doing to move the ball down the field, but also maybe introduce maybe a roadblock or something that's like kept you from, hey, I keep hitting the same problem on this deal, and looking to hear maybe some feedback from other people. Maybe other people have experienced something that way, or someone has found a solution to it already. So I want to open up the field or open up to everybody what everyone's working on. I know a couple of you guys have been walking property, things have been going back and forth. So what is everybody doing that's been positive, and maybe also some challenges that you guys are having, and let's see if anybody in the group has a solution or has experienced a similar problem or success that you guys have, if that's good.
I have a question.
Yeah.
We're looking, Dave Cook and I are looking at a property in West Texas, and it's out in the oil country.
Yeah. Love
Um, it's they're advertising it at an 11 and a half cap, but here's the catch. It's a short-term SLB, so they're looking to exit. Their lease is only about a year left on it, so it's already in the buy box in terms of the dollar amount and the cap rate. But uh, what would be some things that we would consider? Like, how would we tackle that? I'm pretty sure. I mean, we're going to call and find out more, but I'm assuming this company wants the cash now, and they're probably not going to enter back into a lease.
Do you know if they're okay? So if they're just wanting is it an owner user?
Yeah,
Okay.
yeah, yeah.
My initial thought is first look at the lease and see. Obviously, they say they don't want to extend. But I'll say this: the reason I asked that is, do you know if there's any options in the lease to renew?
No, I'll ask for that.
That might be just something to get your eyes on. And the reason why I say that is because I've got a tenant right now. who his coming down to the end of his lease. His lease ends like May 1st, I think, or April 30th or whatever. So here in a couple of months, we've already got somebody else that's lining up to lease it, which is great news. But the reason why for that option is because most people, most business owners, when they are in their facility, especially if they're an owner user, they don't realize how expensive it's going to be to move, and they also don't understand how much time it actually takes to move, because you have to move all of your equipment out into maybe a storage facility or some third party before you move it in your new site. And that also, they don't comprehend this either, but it reduces their revenue because they're not out there selling anything or producing anything. So what I say all that to, if they have an option to renew, you might offer that to them and say, look, whether you have it or you don't, if let's say you bought this building yesterday, say it's going to take you longer than you think it is to move out of the space. It's going to take you longer. If you got the lease, if you're unless they start moving out right now, I just can't. I can't imagine them waiting that long because they've got, if they've got a year and a half left on the lease,
Thanks.
they don't want to have a spot where they're not producing anything for their revenue for their business. But also it's that catch 22 where if you're trying to move everything, well, then you can't produce. But if you move out too quickly, well, then you're also not producing. So it's just like, it's this kind of catch 22 game. So
Yeah.
I only say that to where you can say, look, it's going to take you longer than you think. I'll give you the option to renew. And we can, for the last 6 months of the option, we'll give you like a 20% discount if you're not in there for the last 3 months of the lease or something like that, right? Or whatever, which gives you time at that point to shop the space to somebody else on a vacant site. And it can kind of overlap from the previous tenant to the new tenant, if that makes sense.
Yeah. So do you get that sort of lined up prior to closing, including the follow-up tenant, or do you acquire it at with 18 months left on the lease?
Well, I think there's two answers. The first is if you know that space is marketable and you know that you're not going to have any trouble releasing the space,
Yeah.
then especially if they're under market, let's say the rent is $12 a foot, but market's 20, you probably are like, well, shit, I can't wait to get these guys out of here because I'm buying at a discount already. But also, if for some reason or another that it does take longer than what you think, it's going to be harder to shop that space when there is equipment in there. And the reason I say that, imagine you going into a regular house, and I just know that if I'm looking at a house, it's like it's hard for me to envision how I want to live in a space if somebody else's stuff is in there. It's hard for me to envision how I would want to live and do things if somebody else's stuff is in there. So it's that kind of catch 22, I guess. I don't know. Does that answer your question?
Yeah. I definitely need to get some more information. I'll look at the lease. I'll see what their end game is, and then circle back with you, Rosane.
I think it's great.
Yeah, I think, Matt, that was going to be my question. Kind of lean what Nolan was saying is the market lease rate the same to make it 11.5 cap, or because you don't obviously want to buy it at the 11.5 cap rate if the market doesn't show that, right? So,
Sure.
I don't know if that's something you already have, lease comps for that, but that's something, I see a lot on the deals, and Nolan was talking about challenges. I see a lot on the deals. This is, selling at a whatever cap rate, but then you look at the market and it's like, okay, well, if you drop off to the face of the earth, to quote Nolan, I can't lease it for the same rate. So, I can only buy it for that rate. So
That's right.
Yeah.
that's important.
Well, I have a potential idea or solution here, and I'm wondering, Matt, you said it was a short-term sale leaseback, right?
Yeah.
Okay, so how short, and are you saying they're going to sign a new lease that's short-term, or are you saying like their business has been leasing from the owner and they're coming up at the end of their lease? Like, what does that mean exactly short-term?
So I had to look it up. So it's usually less than a 5-year term. In this case, it's 18 months. It's for liquidity needs, balance sheet improvements, or short-term financing.
So they're just trying to sign a new lease, with a new owner, for a short term, obviously.
Yeah.
So that means that they're clearly not intending to stay long and they're just trying to sell the property, which is fine and everything. But I'm wondering if there's some way to incentivize them to stay by saying, hey, you guys wanted to pay this gigantic number of rent to give me an 11 point whatever cap rate. You guys,
Dial back the lease. Right.
yeah,
Yeah.
pay less rent and stay longer.
Mm-hmm.
Something like that. I don't know.
Good idea.
Yeah. Okay.
Yeah, there's a bunch of ways you can skin that cat, right? It didn't have to be, and again, to get philosophical, just because a building is being offered at something doesn't mean that that's just what the end all be all price of that is. I mean,
Right.
in my book, it doesn't matter. You guys, you do your homework, you underwrite the deal, you're firm with metrics and ratios that make sense to you, and then need the deal less than the other guy does, and you end up winning. That's kind of the key. I
Yeah,
mean,
I would.
yeah, go ahead.
Oh, sorry. I would start by like first saying that you want them to sign a longer lease, and then of course they're going to come back and say no. But that's where you come back and say, okay, well, if you don't want to do that, then we can come to a conclusion or an agreement here where you just pay a little less in rent in exchange for signing a longer lease. So,
Mm-hmm.
but knowing their motivations though as well, like you were saying, going out and finding out what they want to do long term, if they actually want to stay or what their plans are long term, would be helpful, obviously, in that negotiation. So,
Yep.
Well,
Okay.
and on top of that too, a lease that's a year and a half long, it's going to be that's a tough bankable deal.
yeah.
I mean, I would shoot for at least a 3-year lease. That way, the bank's going to be a lot more comfortable with that,
Right.
lending the money on that deal.
Right. Yeah.
But I would maybe even at that point though still go with an offer that would, on to Brett's point, that is closer to market value when it comes to rents rather than if they're not willing to, drop the price and stay longer, or sorry, drop the rate and stay longer, then then I would still offer at a price that's more closer to market rent at a 10 cap.
Okay. All right. And the best way for that, just as a refresher, contacting other local brokers to get those rates.
Yeah, local leasing agents, just looking up online, literally like leasing agents in this area, telling them, hey, I got a
Right.
building that I have under contract, about to get under contract right now, and I just want to get your advice on it real quick, or your opinion. And then just saying, in your experience leasing up similar buildings in this area over the past year or less, like what have you found would be a good range of rents? And do you think that you might have any potential tenants in mind as we speak that might be looking for space similar to this in the next year or two?
Okay.
Yeah,
Perfect.
and Matt, my broker that I use, he has a software that spits out all the comps in the area of your subject property for sales prices as well as lease prices. I don't know if yours has that ability, but I think a lot of brokers do have that ability to do that. And it spits out a nice report of what the asking lease rate was, what the starting lease rate was, how long the buildings were vacant for, things like that. So maybe approach them in that way to see if you can get a report like that.
Okay. Awesome.
I love it.
Good stuff. Thank you.
Who else?
Appreciate
Next, what else is everybody working on, man?
I got a pretty interesting little case study here on my
Yeah.
end. So I kind of touched on this with you yesterday, Nolan, but I was approached by a guy in California that has about 825,000 in capital gains that he needs to roll over 1031 into a like asset around May or June of this year. So he's giving me kind of a tall order here, but I used Nolan's CRE contacts on the school platform, or sorry, on Google Drive. And I just said, I went and contacted a guy who used to be a broker in Birmingham that Nolan liked. He moved over to Huntsville, and I said, man, I got 825K, and I need to buy a building that's at least 1.7 million, but I'm looking more in the 2.2 to 2.9 million dollar range. Do you have anything like that? I know it's a lot to ask. And he immediately sent me three off-market deals, actually two off-market deals. The other one just went on the market. Um, and I jumped on it, used the pro forma, underwrote two out of the three of them, used the acquisition blueprint to kind of like keep track of my progress, took some notes and everything. Long story short, I just got off the phone with Patrick Levette.
No
This,
way. Let's go.
yeah. And I was like, hey, I got this opportunity. I have two deals here that I want to roll this 1031 money into at 40% equity. So the 825 is going to act as 40% equity for both of these deals. And I need 60% LTC from the bank. So I sent the information over to Patrick late last night. He was like, let me look over it and get back to you in the morning. We talked at like 9:30 this morning, and he was basically saying that he's super excited and he's all about it, and he doesn't want me to send it to any other bankers. So
Dude, go. Let's go.
so so anyways, I just use the pro forma to plug in the numbers and see what I could afford in terms of debt and where a bank would be super stoked to lend on it. So of course, I'm making sure that LTV is nice and low, 60%. I'm not asking a ton of the banks, except me as the borrower, I'm young, I'm not super experienced, of course. But Patrick is all about the asset, and I
That's
think
right.
it was Renaissance Bank.
That's
They're all
right.
about the asset. They want me to have a personal guarantee, which is okay, of course, because I think the asset's great as well. And these assets have several years left on the lease, on both leases, and options for the tenants to renew. Great assets, and they're off market, which is awesome. So if I can go off, I got a verbal thumbs up from the bank. Now I got a verbal thumbs up from the investor. Now I just need to go make offers on both of these deals with Greg Wallace, which is the guy down in Huntsville, and then come up with a good structure to hopefully make the sellers happy enough to accept it, of course. So that's where I'm at right now, and that's over the process of 2 days. So we will see if these offers pan out, but I'm not too far away from what they're asking, and I think it's actually two pretty good offers right now is where it sits. So, Nolan, you asked for me to give some positives. Those are a lot of positives. Some negatives, I guess I would say, is trying to line everything up. I'm going to try my best, of course. When it comes to the 1031 rules and the sale of this guy's first property that he's taking profit on, as well as all the due diligence stuff. And I'm going to probably do 45 days of due diligence and 10 to 15 days of close, like we normally do.
Mhm.
But I think that would give me a good timeline if we can get it under contract in like the next week or two. So, anyways, the negatives, I guess, would be more of making sure that me as the borrower is healthy enough for the bank to lend on with a personal guarantee and everything, and also to get the investor to offer himself as a personal guarantee as well. So that's what Patrick was recommending to me, and hopefully my investor guy is cool with that. But I don't want to speak for him, so I guess if that is a negative or a hurdle or an obstacle, then that's just kind of like where I'm at right now. If you have any input or if anybody has any input.
Well, I can start and then anybody else can follow. I think what's awesome is that you've discovered a guy's pain point. He's like, I'd rather just defer this tax than pay it. You use the resources, you made something happen, and now you've got an opportunity to like take something down, like legitimately take something down versus like thinking about it. And so again, I don't know the story on the details of the building and things like that, of course, but my recommendation would be when you're working with this dude, figure out like, is this because I mean, this might be not the only deal that he'll ever want to do with you, right? Like just wonder like what his capacity could be moving forward. But have you already discovered on like what types of terms that you guys want to have on like the cash flow and the entity and everything like that, or what?
Yeah, so he's super open-minded, as many of these investors that I talked to are. But he's just like, if it makes sense, it makes sense. I told him, would you be open to a 6 to 8% cash on cash return. He was like, oh yeah, like I just need to throw this into something, which is a crazy place for me to be in because I can go and find a deal like these deals, for example, are like high eights or low 9% cap rates. And I can actually share my screen here, Nolan,
Yeah, sure, of course.
if you give
Yep.
me
Yeah,
permission.
absolutely.
Zane, just out of curiosity, what's your split on this deal with the investor?
We haven't decided that yet. I'm
Okay.
thinking I might throw out 50-50, but I don't want to. I would be totally happy with 70-30, like him just taking 70% of the equity.
Yeah.
I would even be happy with less than that, to be honest. But either way,
Okay.
what I did here is I just kind of took these three deals that the broker sent over to me, and I was going to combine them. I haven't gotten around to that yet. But anyways, we'll look at each one of them individually. This is on the new performer that we're still working on. But anyways, at this, so here is one of them. They're asking 1.5. I'll offer 1.3. They can bring 40% of this purchase price to the deal. That's $520,000. He said he was okay with 6 to 8%. So I wrote down 7% in the second position mortgage, which would leave me with 15,000 if he agrees to that, and if we arise at that price with that seller, 15,000 on that deal annually, after debt service and everything. And then on this deal, this one is they're asking $1 million. I can offer him 800. That's a 9% cap rate. He can bring 320 to the deal, making up a total of $820,000 at 6% interest, and that being leaving $8,100 left over. So if you combine that $15,000 and the $8,000, what is that, like 27 or something like that total? If my math is correct, that could be completely wrong. And then we can go from there, but we have a lot of room to negotiate. So the seller could come back and obviously give me a counter offer on the 800 and the 1.3. But yeah, so the debt service coverage ratio looks great. Of course, Patrick was very, very happy with it. So maybe we can move forward this way.
What's your cash on cash?
Yeah.
So let's see here. With him, so my cash on cash or like the cash on cash of the whole deal?
The deal. That should be down there at the bottom, right?
Yeah, well, I just look at this. It depends on because this cash on cash comes from a different. Like, I'm not gonna have any money in the deal, right? Like,
Right.
I'll earnest money and do all the due diligence stuff. But I'm not gonna have any money in the deal, so I go off of these numbers here, where
Scroll down to the bottom, a little further down. Yeah. So you're looking at, okay, cash on cash return is about 8%, 7.9 there it says.
Hang on, Richard. You're not asking the right question. The right question needs to be to Zane, or really most importantly to your investor, Zane. What is his motivation? What's important to him? Because like you said a second ago, oh, I'd be happy with 70-30 or 50-50 or whatever. I don't think you've asked him the right question. Asking him the question, what is important to you, man? Like, I know that you're bringing the equity here. What do you want? And let's find a building. He might say, well, shit, all I want is tax deductions, or I don't care about cash flow. All I want is tax depreciation. Or he might say, the deductions don't matter to me. I just want new cash flow because I need new money. As we talk about all the time, you get this, Zane, but
Yeah.
you get what I'm saying though, like asking those questions, and then you can form your offer based upon what's important to him. Am I crazy?
Yeah. Well, like I was saying, we kind of went over his appetite for a return, cash on cash wise. And he was saying, 6 to 8% was he'd be happy with, and this is why the 1031 money is so valuable because people just they're at the mercy of the IRS, making them go and get rid of this cash and put it into another deal within 45 days. They never even see the money hit their account. And so they have to go do something with it. So I think the cash on cash is really, or the percentage return is really what he's looking for. I said 27,000 left over, but I meant 23 with the 8 and the 15 left over to me. But that's a lot of room there. Like $23,000 in cash flow to me would be great and everything. But let's just say that the sellers come back with a higher um, counter offer or counter negotiation, then I have lots of room to go here with the debt service coverage ratio and whatever's left over as well. So I don't know, we'll see. But I think my investor would be happy with 50-50 and this sort of 7% return here. Um, but I'm also willing to give up a little more cash flow and give up more equity if he's specifically looking for that too. So I guess Nolan, if that maybe answers your question, I'll have to have another conversation with him specifically about this deal, and I texted him to go and do that.
Yeah, to Nolan's point, I mean, if he's just looking to park the money and get it done and you're doing all this work for him, Zane, maybe 50-50 is what you just say, that's my requirement. So maybe if it's what's most important to him based on the answer to that question that Nolan said, that's right, Nolan, then that determines what you can do on this deal and how you can tweak it, how you can work it through negotiations. And I think you're sort of in the power seat in a way to kind of help him do this, Zane. This is kind of cool.
Well,
Yeah.
and on top of it too, Zane, on top of it too, for everybody, imagine this one deal. If he's got this amount of capital, he's probably not going to not have it in the future. You can set the tone with this cat right out of the gate and be like, look, this is how I do business 50-50. You get the cash flow if you have interest in this type of investment, and you just set the tone with that confidence. He might just be like, dude, this is fine by me. He might just go with it because that's a standard operating procedure. This is how we do our business. And there's
Yeah.
no wiggle room out of how we do it. And when you have that type of like confidence and you say, this is our standard way of doing things, this is how we do it, it allows for, there's not a whole lot of wiggle room to negotiate. And then bam, what do you know, you got 50% in something that you otherwise, like you just said, you would have been happy with less than 30%.
Yeah.
You're just playing the game and you just have this confidence and be like, not afraid to walk away from something. And then you need the deal less than he does. And then he ends up, agreeing to your terms. That'd be my opinion.
Yeah,
Does
that,
he have an opinion on that?
I like that. I mean, I'm gonna call him right after this call and just tell him what's up, tell him I got a thumbs up from the bank,
Yeah.
and go from there. But I just need the uh, financials from the tenant, if possible, from both tenants, if possible, and then also um, uh, a copy of the current leases for the bank and obviously for us too, just to kind of get a better understanding of the plan moving forward. But yeah, so I'm excited, of course, but I want to make sure that all my T's are crossed and I's are dotted. So thank you guys for the feedback.
I love it. I think it's
Great
great.
job.
That's awesome, dude. Yeah, keep that rolling, man. That's awesome.
Thanks.
Who else? What else is anybody working on? I know we got a couple of new faces on here too. Stewart's new. We got a couple other guys on here. Maybe he's not crazy new.
Yeah, I got
What's up, man? Yeah, I was gonna say you and I were just texting the other day, man.
yeah, I've got a lot going on, I guess. And feeling since it's my first time going through all of this, kind of just feeling my way through it. Um so I've met with a broker this week, and then I walked my first two properties yesterday. And then at the same time yesterday, another broker I talked to last week sent me to as well. So I've underwritten those. I've got questions back out to him. One of them's vacant, but is in a great location, really close to the airport, Indy Airport. The other one has tenants in it, but they're short term. And what the broker was telling me was the owner has kept them short term because he thinks the market for the building is a owner operator. So he wants to give them the flexibility to be able to use the building if they were to purchase it.
Understood.
So he seemed to think they would be open to long-term leases, but that's just how they were marketing the property.
No, totally understood. I think, and one piece on what Stuart's talking about, like we spoke on the phone, gosh, maybe Monday, Stu, I don't know, whatever day it was.
Yeah, I don't remember.
And he was about
This
to
week's
go
been a whirlwind.
I know, seriously. He's walking this building, he's taking action, which is what we're all doing, if you guys haven't already, let me just again share this piece that is on our pro forma. It's on the due diligence tab. And I want to believe everybody has this, but Stu said that maybe we haven't sent the most updated one, Zane. Am I crazy? I don't know. Maybe I'm losing my mind here. Do you mind
Oh
just
yeah, well, um, yeah, we need. So what I was thinking, and I don't know if we should do this or not, but we haven't released the new one yet. There's still a couple things that I want to kind of maybe try to figure out, but I
yeah, there's a
also might.
couple of updates here, guys. Like just for everyone to be clear, Zane and I we spend every day together like trying to figure out how we can like improve this for y'all. Like it's like our obsession, okay? But there's a couple of things that we're trying to improve to like just make it more valuable to you guys. Um, but what I'm getting at though is what I was going to say. And when this new pro forma, when we do kind of generate this, we call it the 3.0 pro forma, whatever. Um, this was a big piece that I think is important for everybody. And the reason why, actually, because Brett Olossery is on here right now. I think Brett's still on here. Is maybe he bailed. I don't know. But Brett had a building that was up in Michigan that he was looking at, and I had to respond to this email. And Brett, if he was on here, I would say it in front of him, of course. But there was a bunch of questions that like just were not answered when he shot me this email. And I got with Zane, I was like, man, I want to serve Brett as best as I can, but also there's information that he just did not gather. And so Zane and I sat down one afternoon. I was like, let's go over 90% of the information when someone is walking a property that is important when, for you to actually get your eyes on it. Of course, this top portion is just, the physical and financial attributes. But then I broke down just some more information on the actual property. So that way, what I would really recommend you guys do when you are walking a property, download this thing, download it onto one pager, and take like a clipboard with you as you're walking the property. You go over the purchase information. You guys can have the debt information, the lease information, the physical, the rental market, the deferred maintenance, the value add potential, all this stuff that goes into just underwriting in general, maybe even before you're under contract. It does a couple of things. The first, most importantly, it determines if the deal makes sense or not, right? Like when you get a chance to look at the physical attributes and the market rent, and then you see all the deferred maintenance, like, does the deal even make sense or not out of the gate, right? But I think second of all, what it also does is it heightens and it elevates your sophistication in that broker's eyes. Maybe when Stu and I were talking the other day, I shot on this screenshot of this because I don't think, again, we haven't sent this to him. But I was like, dude, if you roll up there and you're asking questions like this, you're immediately, in my opinion, viewed differently in the broker's eyes. They're going to be like, dude, this guy's for real. This guy's asking really good questions, like even asking about the HVAC warranty. Like people that aren't serious don't ask about a warranty on an HVAC. You know what I'm saying? Like it's little things like this that I think I've just discovered as I've been playing the game, that if you guys roll up like this with this one pager and it's got all this information on it and you gather all this, number one, you're going to be that much more informed. You're going to be able to poke holes in the deal, which is going to allow you to buy it at a better price or better terms potentially. But it also proves your sophistication with brokers. That's going to tighten your bond with those guys. So when the next deal pops up, you're kind of, front of mind and the opportunity to they're going to send it to you first. So that's kind of what's on my mind. Does anyone have a thought? And again, we can send this out, Zane, of course. We just spend a lot of time trying to improve this as much as we can before we just send out a new update, I guess. Zane, you got a thought on that?
Yeah, I actually updated this part right here a little bit just the other day. And I put in there, if you scroll down a little bit, let's see, I put in there something, about the tenant info, like the existing tenant info. So we don't have, like there's lease info, but I've also put
Okay.
in, anyways, there's some other things that I kind of like adjusted in there, and I have that one, Nolan.
Okay.
Uh, and we can, yeah, send that out. I guess just so everybody has it, we can just go ahead and send it out like as it is. And another thing is if anybody has any suggestions, I know a lot of you guys are proficient with Excel and Google Sheets and everything. If anybody has any suggestions on how we could make it even more valuable or better, then we're
Right.
all about it. So like, and I know a lot of you guys will
The
adjust.
one that I had, Zane,
Oh yeah,
sorry, I didn't mean to cut you off.
you're good. You're good.
Um, I created a rule in my spreadsheets where if it meets the numbers, it turns green. So on that one tab, that way you don't have to think about it. It just green because it's got the right DSCR number or the right cap rate and whatever. Or
Oh, okay, nice.
That's fancy. We should do that.
Yeah.
I need to learn. There's a way to do that. And I've done that on some other stuff. I need to
I'm
go.
happy to, if you want to send me over your link me to your copy or a copy of your
Okay.
copy, I
Yeah.
can do that for you.
That would be awesome. Okay, cool. Let's plan
Like
on.
it's like conditional formatting or something like
Yeah.
that.
Yeah.
Okay, let me all right, yeah, well, Nolan, are you writing that down?
I'm just writing down conditional formatting with yeah
Okay.
right now.
Super easy.
Yeah.
Cool.
Yeah, and if you guys yeah, moving forward, like if you guys have any suggestions, we're open to it. And we just want to make sure that the pro forma is as valuable as humanly
Yeah,
possible
we're
for
just trying to
guys.
improve this bad boy as much as we can. Like it's just funny because I kind of created it out of the gate, thinking that certain things were important, and then as our time has gone on, it's just this is important, this is important. We've just improved it. Then other things become not important. So we're just trying to trim the fat while sharpening the edges too. So if you guys have suggestions or thoughts, hey, this might be cool. Zane and I literally get together every single day. We're together every day. So if you got something on your mind, either way, we're always around for, information or thoughts, I guess. You know what I mean? All right, who's next? What else is anyone else's mind?
Didn't you say you had some sort of opportunity pop up today, Nolan?
Oh yeah. So I'll share this very briefly. So I this morning I went over to one of my buildings, East Clift Industrial Boulevard. It's over in Trussville, which is like northeast Birmingham, and was meeting with one of my tenants. He's also does infinite banking with me. He actually runs some of his money through like they do advertisements for like the Birmingham Bulls, which is like the hockey team in town, and they got their name on the ice and they park their truck out in the front of the that kind of thing. And so we were just I'll show you guys kind of what I shared with him today. He wouldn't mind me sharing this. This is what we're doing for him. It's kind of cool. It's a different way of how he's spending his ad dollars. You can see it. Basically, what this guy's doing is he's got him and his business partner. They have they both have infinite banking policies on each other, which is just life insurance. So buy sells, of course, in case like for example, like if Zane and I were in business together and then I was hunting in the jungle and had a bad day, got hit by a blow dart, Zane would have to get in business with my wife Rachel, which would be a bad move. So what that life insurance policy does essentially is pay Zane a life insurance death claim, and Zane takes that money, pays my wife in exchange for 50% of the business. So Zane would then own 100% of the business and would not have to come out of pocket, to pay or go into business with Rachel, which again, not right or wrong if that's what you want to do, but it's insurance against the what if. So this is how these guys are currently set up right now. They have a buy sell, but they weren't utilizing it for these ad dollars until recently. And so what they're doing essentially is they borrow against and I'll get into how this opportunity presented itself for myself, but they're borrowing and this guy's name is Mike. He puts the money into his personal account. He takes the money, invests it into the business account, their joint business, and then he deploys it into this advertisement opportunity, right? The Birmingham Bulls require a certain amount of ad dollars every year, and they require it at the beginning of the year. So he's essentially running that money into this advertisement. The opportunity spits out, some type of cash flow. Again, new leads they're in the roofing business, so there'll be generating of leads, and that means they can generate opportunities. The cash flows back into their business account. And then from there, based on the investment, he's going to receive a profit or a dividend or a split, however that him and his partner agreed upon their profit share. And that goes back into his personal account. Forget the taxes for a second. But then he refills, let's say at 12%, let's say he put 100 grand in. At 12%, he receives back $12,000. Again, I'm using round numbers. And he takes 12 grand, he just puts it back in his life insurance policy. Now, that doesn't sound like a big deal. There's some money movement and everything. But what ends up happening is he basically receives on this policy loan repayment is 300% return ROI because it's 12 divided by 4. So he's using while his money is still in these policies, compounding, protected, that whole thing. He's using the insurance company's money to go and generate revenue with advertisement dollars. And so he's using the insurance company's money to do that, which generates a 300% return because he's earning 12% on someone else's money and it's costing him 4. So that's what he's doing from this kind of like really high level. And I just kind of showed him the flow chart of it. And now him and his partner are about to do some more policies, which is great for them. And their business is generating gangbuster. So it makes sense for them to do it. But also I'll share this with you guys. I was walking this building, and this property is again, it's like 5,600 feet, and I was like outside walking it. We were just talking about something else, and he's like, "Have you ever called this next door neighbor?" I'll show you guys the property real quick, just because you guys are on here. We've only got a few more minutes. I'll just share it with you. 5508 East Cliff. So basically, this is the property that I own right here. And this lot right here is next door to it. It's just a vacant parcel. And so as I was sitting out there walking the building with Mike, and he's like, "Dude, have you thought about trying to buy this?" And I go, "I don't know, man. I'm not really a developer." He's like, "Well, this dude is motivated, man. This guy is so motivated. He was supposed to develop it for his business. He was going to be an owner user. And COVID hit, the price like tripled at the time to build. And now he's got another building and he's happy and he just owns the land now. And this area is like just filled with these little buildings like this. So I was over there and I'm like, I call my broker Sam. I was like, "Dude, we need to freaking buy everything over here. Like seriously. We got a closing on Tuesday." And I was like, "After that, we are going back over to East Cliff. We are buying every freaking thing over here." But what's crazy is he is motivated to sell, and he already did like this survey. He's already got like an architect has drawn up these plans, like all this stuff of this property. And so basically what I did is I called him back and I said, "Look, man, with this, you know, architectural design already," I said, "How motivated are you want to sell? Do you want to do a deal?" And he's like, "I will absolutely do a deal." I said, "How about this? Like, very, very generally out of the gate, we can agree on like some terms, we can agree on some terms, but you leave money in the deal until I develop the space and lease it up and refinance it or sell it." He's like, "Dude, I'll do anything. I don't really care. I'm tired of owning this property," because he owned it for 5 years at this point. And so I called both of my bankers today and I said, "Hey, what would it look like to get some debt on something like this?" And they're like, it'd be easy. It'd be easy to do, especially if the guy wants to leave money in the deal and subordinate their position behind us. And I was like, that wouldn't be hard. So that just basically happened because I rolled over there. I literally walked into I know this sounds ridiculous. I walked into 2 other buildings while I was driving over there. And I just said, "Who owns this building?" Like I go, "This is an awesome business. Who owns this building?" And "Oh, this is Jim," or "Hey, this is John," whatever. I said, "Is Jim here?" And both guys were not there this morning, but I left messages on both of their phones to call me to see if they have any appetite to maybe do a sale leaseback or something. I mean, end of the day, it might not come of anything, but the opportunity to develop that site with the seller that's motivated, where I could be all in on something for like 450 and the market might trade at 800, just because I kind of called this dude with a lead in from one of my tenants who was like, "Dude, you should call this guy." You just never know what's going to happen, just being around like that. So that was a cool opportunity. Like I said, I've got basically verbals from both of my bankers that they'd finance it on a construction loan, kind of do like construction to permanent debt kind of thing. And now we just got to come together and figure out what the price. I sent to my contractor to see what the price to build it would be. And if the math makes sense, we'll just do it. And I've never developed anything, but we'll just figure it out, which I think is what we're all trying to chase, is just figuring it out together. So that was a fun little base hit win today. That nothing's happened yet, of course, but I haven't been that close to doing a development deal probably in my career, other than when I was up in Indiana before. So anybody got a thought or opinion on that? I know that's kind of quick and to the gate like that, but I thought it was kind of cool,
Have you already thought about what you might develop there or what you might kind of?
The guy already had a 5,600 square foot warehouse like blueprinted out. So that was also 5 years ago. So maybe things have changed. Maybe they haven't. I don't have any idea. But I was calling my contractor asking him what it would cost to build like just per foot. And then I can get a better understanding of what it will cost. And if it doesn't make sense, it doesn't make sense, and we'll just let it ride. But I think it could be cool. It could be an opportunity.
Well, what I'm thinking is, and you might have already touched on this, but if there's all these industrial spaces around that, maybe those industrial tenants there that are running businesses might need a little bit of laydown yard already, or like some kind of fenced in gravel, like non-AC, whatever, uh, warehouse to store their stuff. And you could maybe even get a lease signed or something like that before you even start building. I don't know, and borrowing the money and buying the vacant lot.
Yeah, I'm not opposed to that either, and I think that's a good point. When I was out there with Mike, Mike was like, "What Mike wants to do is he wanted to buy the building before I bought it. He loves the location, loves Trustville, the whole thing. He wants to actually let the other tenants' leases expire and then rent the entire building for me. And he was the one that gave me the idea to go build that site so he can create a compound for his business.
Hmm,
So I would almost be doing like a little underneath build to suit, if that makes sense.
that'd be great.
Yeah, and then I could have one tenant that occupies two parcels, and then I can really wedge them in that location and put them on a 10-year lease and sell it at a six cap if I wanted, or just ride it out till, the sun sets, that kind of thing.
That's awesome.
So yeah, we'll see, guys. I mean, again, that's very, very early, of course, but just a nice little base hit opportunity that came up today just because I was out and about. Like, I guess I'm just saying that where I'm not an expert, but man, when you're out and about and you have a little bit of outgoingness and you ask questions, what's going to happen over here? What's happening over there? Oh, I got this guy's number. Send it to me right now. Like you just never know what's going to happen. You just never know what's going to pop up like that. And like I said, that guy sent me that blueprint and survey 20 minutes after I spoke with him on the phone, and now he's already open-minded to doing a deal. So who knows, man? Who knows what's going to come of it? So anybody got a final thought, a final question on that before we start to head out and move on? Awesome. Well, everyone just keep moving the ball down the field. I don't know when exactly our next call. I think maybe it's next Tuesday night, I believe. Yeah, next Tuesday, the 18th is our next call. So if you guys, again, like I say all the time, if you got something else on your mind, you're working something, don't hesitate to reach out to Zane or I. We're on standby. Anything that we can do for you, we are available. So if you'd like to, for example, I'll say this too, just very briefly. If you've got a like a situation that you're working on, like for example, like even like a real estate deal like this, there's a lot of I can build one of these out for you and maybe your unique circumstance and just kind of show you, hey, what would the math look like for you and a partner on a real estate transaction? Does it make sense to do infinite banking for your first deal? Does it not make sense at all? What does the math look like? And we can just build one of these out specific to you and just show you kind of the flow chart of what the cash does while it's out and deployed, and just we can go over the math on stuff. If this idea, but we can just create something specific to your situation and then go over, the math and the numbers like specific to you on like, a normal call like that. So just something I want to throw out there because like I've discovered it. I tell everybody the same thing. If you're going to get into business, somebody, a buy-sell agreement, I would say, is a non-negotiable. I'm closing a deal next week with a client of mine, and we both are putting buy-sells on each other. Again, he's got a lovely wife. I just don't want to be in business with his wife. I want to be in business with my guy, and I think he feels the same way if something happened to me. So that would be just a non-negotiable for me. So if that comes up for you guys, I really recommend like checking that. It could be term insurance, it could be whole life, but just don't be the one having to come out of pocket to pay the spouse of somebody when you can just have the insurance company do it. That's kind of what I've discovered, and that's some of the best advice that I've got, and I took it to heart. So that's part of my like due diligence now. Hey, are you insurable? That kind of thing. So something to consider as you guys are moving the ball down the field on your own deals. And then of course we can always discuss that individually if and when that time comes up for each of y'all. So just want to throw that out there. Zane, you got any final thoughts, man?
Nope, that's everything, and we will put that pro forma out and just let you guys go at it.
I love it. Cool. All right, everyone. Thanks for making it today. Let us know if you have anything else in your mind and we'll go from there. All right.
All right,
All right,
thank you.
guys. Thanks. Talk to you then.